Today was an interesting Thanksgiving gift to the Indian stock market from its counterparts in America. And actually, the fall in today's market was very selective. See Nifty on the expiry, which is the weekly expiry, literally no volatility in the index. It fell very early in the day because of the huge impact of the ADANI group fall. Then stabilized around 23,350. Didn't go anywhere. Bank Nifty, however, was still a bit volatile, up and down, up and down. Now, one more phenomena which is happening in the background, Bitcoin is nearing a century, touched 98,000 today. And we were in lower 70s just about a week back. We are talking about an asset of $2 trillion size in market cap. So I drew this correlation heat map, Bitcoin, its sibling Ethereum, gold, silver, Nasdaq, and Nifty. Very interestingly, this graph, though it is showing correlation to Bitcoin and Ethereum, the correlation has reduced a lot in current year 2024. If I was to take the data from say 2023, these are a lot greener. That is perhaps to do with the fact that these coins have gone up nearly 30-35% in just 1 week. Now on a crazy day like today, there were bound to be 52-week lows. Today we have new entries. ADANI Enterprises hit a 52-week low. ADANI Energy, Wilmer, NDTV, all these are ADANI pack companies. And I'll talk about that in Nugget section today. Nugget 1. Yes, I'll talk about 2 nuggets today. ADANI Empire's dashboard, that's a new one which I created. In the Nugget 2, I sold Family Silver today, Reliance Industries, that too at deep loss. Nearly 2 lakh loss booked in a single day. And I'll talk about the rationale why I did that today and what I intend to do with the money that I freed up. Now, no surprises for guessing the 2 ADANI companies in the index. They were down and down a lot. ADANI Enterprises, ADANI Port. And the crisis today was about power companies. Surprisingly, Power Grid was at the top. This probably is a beneficiary of ADANI Energy in some ways. 15 stocks only were up today, 35 were down. TCS was at the top, followed by Power Grid, Ultratech, HCL Tech and Infosys. What was down, of course, ADANI Enterprises, ADANI Ports, Reliance, SBI, ITC. Look at the pull from ADANI Enterprises, 55%. ADANI Ports, 30%. Next 50 also, the bottom of the pack completely belong to the ADANI pack today. In fact, this line after that also is stocks impacted by ADANI Group. And these companies were already in the red zone. The only thing is that the reds have got concentrated in the bottom now. Only software standing tall a little. Indian hotels again was green, hotels and entertainment, but the remaining complete map was red. ADANI Enterprises down most. See here also, ADANI Enterprises led diversified industrial was actually making money till about couple of days back here. Suddenly, it has lost most money for the investors at the bottom of the pack. This was the ferocity of fall in this stock and this is the market cap of this stock. If you are wondering what is there in transport infrastructure, this is ADANI Ports. Nifty stock-wise was not looking good at all today. One big reason is Reliance was down on a day like today. There was nothing wrong per se for Reliance today. In fact, crude prices are a little higher only. SBI, of course, was a calamity of the ADANI Group saga. Bank Nifty actually showed some resilience after the initial fall. Kotak Mahindra was down, then came up. Axis Bank was down, then it came up. Same with ICICI. Even SBI was down a lot, but then it recovered a bit, though it closed 3% in the red. The two words, there is a line here and there is a line here. The stocks below this line are in the red zone. And while these numbers are small, but their impact is big because of the market cap. This is minuscule. And general belief on days like today is that all public sectors have lended to the ADANI group of companies, so everyone fell. NBFC pack was looking really sad today, and I'll talk more about it in the Nugget section. PFC, REC, big cuts, 4%, 5%. These companies have collaterals. The ones which are in microfinance pack, they don't have collaterals. Today, Wipro cooled down a bit and the product companies Zomato and InfoEdge were down. Otherwise, the sector was looking fine. The volumes were also good. The number for ADANI Enterprises is so big that you will not even see the lifetime high of Nalco here. This stock is looking good. 4 green days in markets like today. Oil and gas, primarily 2 problems, ADANI Total and Reliance. In fact, Oil India was up Same thing in power sector. The Adani pack cut was so big that nothing else will be visible. Suzlon hit another upper circuit today, 5%. Power grid up 3%. Consumption pack, there were some greens not visible because Adani Wilmar 10% down. The non-edible pack looked really weak. There is no Adani company here, but still big cuts. Asian Paints made new low. DMart made a new low. The side effect, after just one green day, Nifty is back to red, minus 0.7%. Bank Nifty also gave up the winning streak of 3 days. This is also primarily because SBI was down a lot and HDFC did not do much to support the market today. Nifty IT is what supported the markets. TCS 0.8%, Infosys 0.5%. Now, one problematic factor which became clear today was that Adani Group had not disclosed the US bribery probe in India on time, especially in the annual books. This could be a regulatory problem if SEBI pulls them up for this. The problem is that mutual fund holdings are 43,455 crores and these are mutual funds. I don't think this includes LIC. Now, one interesting element, Meta platform. Ever since Donald Trump was selected, this particular stock has not gone anywhere while the Nasdaq has been on fire. Remember, Donald Trump was banned on this platform. And in some ways, it is a competitor of Elon Musk, the Twitter platform or X.com. Gold is looking good yet again, 76,500. Silver above 90,000 now. Kalyan Jewelers, I sold the remaining quantity. Good profit. KFin Tech, I avoided selling till now. In fact, I let go of a lot of profit because I had good 10 units of this invested. Today, I thought it will be better to be on money. Reliance was in the long-term portfolio, but it was going down continuously, and I'll talk more about it in the Nugget section. I sold it at literally 17-18% loss. This also was more than 10 units in the portfolio. Adani Ports was again there in the midterm portfolio, but I sold it. I also sold Adani Wilmar. Once the group stabilizes, I might buy them again. With the freed up money, I bought PFC and I bought a lot of it. And I also bought Hindustan Petroleum. That was the counterpart of Reliance to a large extent. Overall, a deep red day. Alright, we'll talk about Adani Empire now. This is a new dashboard that I created just to track the Adani group of companies and the impacted companies. There are few things which I want to highlight. Adani Enterprises hit a lower circuit very first thing in the day. There were revisions, however, 1, 2. This is bad. There was no buying coming to Adani Enterprise at all till 2 circuits were revised. No buying here at all till this circuit was done. Same with Adani Ports. 1, 2. And then there was some buying. See, Adani Wilmar fell, nothing for the day, lower circuit. Adani Energy, that's a big company, 84,000 crores. No buying whole day. People just stayed out. Even Adani Green, 1.8 lakh crores, 19%. Overall, this particular group of companies, including the impacted companies, SBI, Bank of Baroda, PNB, PFC, REC, that entire damage was 10%. Now, there are a few things which I wanted to share. That SBI, yes, there is an exposure. Bank of Baroda has given loans, PNB has given loans. Most of these loans carry a collateral. These are not NBFC loans like the microfinance ones or the small finance ones. And Adani Group, to my knowledge, has not defaulted on any of their loans till now. They somehow managed to get the money. So while the chaos is there, while there is something happening from the US government side, these are not the first problems that Adani Group has faced. The biggest thing which I was surprised was with the ferocity with which people threw REC and PFC on the floors. These projects carry the collateral of the power projects. I mentioned this couple of days earlier also. In the worst case, if Adani Group does not pay them, then REC PFC will confiscate the power plants. Also think of it like with their ratings kind of now degraded, they will not get easy loans from US. Most of the Adani pack is either ports or trading. Third is power. It is a capex hungry sector. If they don't get money from outside now because of whatever damage that has been done, who will give them money? They can't grow without money. They can't default on PFC, REC. Their maximum exposure is on REC. Now PFC obviously holds about 50-60% of REC, so it also has impact. So what I did today was I bought lot of PFC and I will probably sell off a bit of REC later on, and I'll continue to hold PFC in lieu of REC. That reduces my risk, but again, I don't think there is a risk. See the volumes of panic, 221% plus 150%, more in REC. See Bank of Baroda's pattern. Now this pack may stagnate for a while with downward bias. It will take few days to stabilize, probably give it this weekend for some action, some clarification. I am not very hopeful that government will step in at this time. There will be a who blinks first game with the new US government somewhere in January end. We might be getting ready for those mind games at this stage. If you can't stand red in your portfolios, I would say that stay away from this pack. I myself have kind of exited from each position from this particular part. I continue to have positions in PFC and REC, nothing in SBI, Bank of Baroda or PNB. Neither I am intending to. I might get into Indian Bank maybe. Reliance, why I sold Reliance? Reliance Group has primarily three businesses. First is oil, more of a refiner. They get crude oil from outside. They have their own drilling also, but they import a lot of crude, they refine it and they sell it in India as well as abroad. Significant part is exported. The second part is Jio Telecom. The third part is retail, which is Reliance Retail. Jio Telecom is held by many entities. A part of it is held by Reliance Industry. Oil, of course, is completely under Reliance Industry. There is also a Jio Financial that also is partially held by Reliance Industry and partially by other entities. This is not a subsidiary. That is why I listed it separately. Now, my personal reading is that oil right now the demand will be low for the times to come. Elon Musk will ensure that Donald Trump does not get off the pedal of EVs completely. In fact, one of the significant businesses of Elon Musk is rooftop solar panels. Also because of all the slowdowns across the world, including China, including India, the demand for oil will definitely go down. Volumes, I don't think will be reduced to create artificial demand. So with crude prices remaining stagnant or going down eventually, maybe towards 70, the GRMs for Reliance, Oil India, ONGC, they will all suffer. This will also to some extent be a problem for MRPL and Chennai Petro. Let's come to the second point now, Jio Telecom. Starlink, Elon Musk's pet project. There will be a hard lobbying now for Starlink to be given a license in India. Primarily impact will be on Airtel and Reliance. Is there any telephone involved? I don't think so at this stage because that will in general be under license only. Psychologically, the P will get impacted for Airtel and Reliance Jio both. Now Reliance Retail, if people are not buying goods from HUL, Surf Excel, Colgate, Gillette razors, if these are not selling, who will go to Reliance Retail to buy the expensive products? Who will go to Urban Ladder? Trend is suffering. Will people go to Reliance Trends instead? If the entire retail sector is under threat right now, under problem, Reliance Retail also will have problem. What remains? Jio Finance. What is the business model of Jio Finance? They are starting business right now. So overall Reliance Group is looking weak right now. There is a lot that Mr. Ambani needs to do to fix this. And ever since the marriage season ended, we have not seen too much action being taken by the group to salvage the situation. The bonus was there, but it had no impact. One thing which would come at this stage is a buyback. But that is again artificially taking the prices up just like TCS and Infosys have done in the recent past. That is not business improving. And it is hard right now to fix all three of these businesses. That is why I thought that let me just draw a line in the sand, get out of losses for now, use the money and buy something that is more likely to go up. For example, if crude is going down, HPCL, BPCL, IOCL, they will go up. HPCL is the most volatile one that goes up fastest. So that is why I use the money which I got from Reliance to buy HPCL today. I have not spent the entire money. There is some part of retail also which I need to buy. Just need to make up my mind. I'll probably buy something like a Trent or Page Industries or something using this money. So I'll diversify the 8 units remaining out of 10 of Reliance to buy about 3 units each of 3 companies in the 3 sectors probably. I'll probably not buy anything in telecom for now. Maybe Tejas Networks. Hope this section was useful. This is not investment advice. This is my decision. I'm just sharing my rationale, which could go completely wrong. Reliance could go up 5-10% tomorrow and I could be proven really wrong. Thanks for watching. I will see you tomorrow.